Good evening, everyone, and welcome to Admiral Markets Premium Webinar. Today is 22nd of February 2015. My name is Nenad, and today we will talk about supply and demand trading, and then I will show you the indicator which you have probably installed by now, and I will show you how to use supply and demand trading to your advantage. The thing is that with supply and demand, you will raise your chance of winning the trade significantly. But you need to understand the concept behind supply and demand. Before we begin, as always, our standard is disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with the Forex market. By accepting the risk, you are also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not a .co.uk website but a globaluse.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. So, we will talk about how to install indicator, supply and demand zone in the zone trading, understanding supply and demand, and indicator explained. So those are 5 different topics which we will talk about today. And first we begin how to install the indicator, okay? So by default, usually if you trade on Windows 7 or 7, or maybe you're still trading on Windows XP, whatever, so you should put your indicators into C, program files, MetaTrader 4 Admiral Markets X, MQL4 indicators folder. Okay, so C is the main hard disk. If your MT4 is installed on a partition or a different HDD, then use the main installation folder. Okay, so the primary thing is that Windows 8 and Windows 8.1 users installing the indicators and templates are different. So Windows 8 8.1 users should open data folder and install it there under MQL indicators. So once you open your platform, you should open file, then click open data folder. Then on a separate screen you will see your data folder and just navigate to MQL4/indicators and put those indicators there. It should work. Okay, so for all indicators, by default Windows 8 and 8.1 handles those all MT4 things differently, and definitely that is why we use open data folder, because it will directly pinpoint the data folder where MQL indicators are installed. Okay, for all of you, Dorin is asking how do we get this indicator. For all of you who never got this indicator, I will give you the link so you can download, of course, the indicator, but let's wait after the webinar, okay? Because the indicator has already been sent, okay, to Admiral Markets Live account holders, and you should have got the indicator, but of course if you didn't get the indicator, okay, we will definitely be sending the indicator. Okay, so what are supply and demand zones? So this presentation which I am doing now, I will try to be as simple as I can be, and I won't bother you with definitions, with some things which are hard for you to understand. So definitely this will be very concise, this will be very informative, and this will be very easily, this should be very easily understood by all who are trading Forex market, okay? And I really try to be as simple as I can be. Marus is asking, is this a part of a volume spread analysis? No, this is not a part of volume spread analysis, but this can be used in volume spread analysis, definitely. Supply and demand can be used in every single Forex system. It doesn't matter if you scalp or you trade intraday. This can be used, and this can be very helpful to all traders, be it scalping or intraday or intra-week, whatever. So, of course, this also can be used as the part of volume spread analysis. So, supply and demand zones are the zones where the price will possibly react, okay? So, as we can see here on our slide, this is what comprise supply and demand zones. So, the zones where the price will possibly react, okay? This is not a simple horizontal level of support and resistance. This is the zone. So that zone can be 10, 20, 30, 50 point buffer. And within the buffer, in the zone, the price is expected to react. If we use our standard method of drawing trend lines, we know that when the price drops, we expect it to touch this trend line and then bounce, okay? So this is a simple trend line. When we talk about supply and demand, we need to have a bit of the buffer. So if this is a simple level, let's call it 1.12000, demand zone will be basically something in between 1.12000 and 1.1, let's say 190 or 80. Whatever we define it, okay? So it is the zone where price action should react, and there should be the raise of volatility once supply or demand zone is reached, okay? It's primarily trading zone, okay? It's primarily trading zone. So that zone usually is used by traders to define possible entries and possible exits, okay? So traders either want to sell, it's called supply, or buy demand a specific currency pair. So the zone of resistance where we should exit the longs or we could possibly enter the shorts is called supply, okay? The zone which we could possibly open new bullish position or where we could possibly exit sell position is called demand, okay? So these are supply and demand zones, okay? These levels, these zones are expected to hold price action within the zone until broken. So that means that zones will possibly hold the price until the price breaks out in a single direction and then proceeds to form new supply and demand zones. The closer you are to demand zone, the better for buying or exiting shorts, okay? So the closer you are to demand zone, the better for buying or exiting shorts. The closer you are to supply zone, the better for selling or exiting longs, okay? In my Camarilla MACD analysis, if you follow my analysis on Forex Factory, Admiral Markets Analysis, Admiral Markets Blog, Forex Street, you can see that I use always the same term for defining entry zone, and it's called point of confluence. Point of confluence, or POC, is based on modified supply-demand theory. Okay, so it can be treated as supply or demand zone. That is the entry zone where we usually expect the price to come and then we can enter the market, and it's based on modified supply and demand theory. Okay? So, with having said that, now we will talk about in the zone trading. Okay? So first of all, I need to say that every single trader should pay attention to historical price action and the zone. So the market can do virtually anything at any time. Okay? Definitely it can do anything at any time. Personally, we don't have any control of the market. Okay? The problem is that all of us have the tendency to take this characteristic for granted, and in ways that cause us to make the most fundamental trading errors over and over again. So the fact is that if traders really believe that anything could happen at any time, there would be considerably fewer losers and more consistent winners. So how do we know that virtually anything can happen? We need to dissect the market into component parts and look at how the parts operate. Because the most fundamental component of any market traded is its traders. We, being individual traders, act as a force on prices, making them move by either bidding a price up or offering it lower. Okay? There are many reasons and purposes behind a person's motivation to trade any given market. Okay? But ultimately, we are here to make profits, and we are here basically to cut losers short. Okay? So we can safely assume that regardless of one's reasons for trading, the bottom line is that everyone is looking for same outcome. It's always the profits. So we either buy low or sell high, or we sell high and buy low. If you want to be a trend trader, you will definitely want to sell high and buy low. Okay? If you want to be a breakout trader, then you can buy high and sell lower, but that is not always good, especially when supply and demand zones are far from each other. Okay? Now, the thing is, I need to say that if let's say we assume that everyone wants to make money, then there is only one reason why any trader would bid a price up to the next highest level or sell it. It's because he believes he can sell whatever he is buying at a higher price at some point in the future. That is how big banks do. They know that when the price is coming higher and higher, they know that there will eventually be a lot of supply there, and traders, including big banks, hedge funds, will sell the price higher. Okay? That is always the truth in market. Okay? Now, also, the thing is, if we look at the market's behavior as a function of price movement, and if that price movement is a function of traders who are willing to buy and sell, that is that all price movement is a function of what traders believe about the future. Now, when we talk about the future, we definitely need to say that traders, when entering the market, have 50% of chance to either win or lose. Okay? But the thing is that if you do the trading properly, and if you know how to trade the market, you will definitely be stacking the odds to your favor. Okay? Stacking the odds to your favor means that you definitely will know how to overcome the possibilities of making pre-mentioned errors. Okay? That is why you should always watch for the price compared to historical price movement. That means that you will be looking at now moment buyers or sellers versus historical buyers or sellers. Stacking the odds in your favor means that you will raise your initial chance to win or lose, and most importantly win, to let's say 70-30 instead of 50-50, and ultimately 80-20. That still has to, of course, it has its connections to proper money management and risk management, but the overall odds are coming and stacking into your favor when you're looking at historical buyers or sellers. Now, traditional systems which have been sold over the internet as PDF forms never ever mentioned historical buyers or sellers versus now moment buyers and sellers. And that can be very, very serious. That can have very serious impact to your trading, because trading mechanically like a robot will never ever get you the money in the long run. You can gamble, you can trade, but having the appropriate system, having the appropriate knowledge about now moment buyers and sellers versus historical buyers and sellers is of utmost importance for you as a trader to overcome the obstacle of making a good positioned entry. Okay? Now, we all can make mistakes from time to time. I personally know that some of my experienced colleagues and traders who are trading with me and who were posting with me on my thread Forex Factory, Spiders then, they had a lot of success 5-6 years ago, but today some of them haven't adapted to new market conditions and they lose. So I'm not saying that they don't know how to trade. They definitely know how to trade because they are proven traders, they are good traders. People love them, following them. But the thing is risk management, money management, and change of market behavior during the past couple of years. Every single market implosion has the impact on current market movement. And you can see now what is happening to the market when the Swiss National Bank decided to unpeg the currency to euro. That created basically a new moment, a new flux of market traders and market movers. And we will definitely need to adapt to that now moment buyers and sellers, because we cannot see so obvious historical buyers and sellers on many of those pairs. So now moment buyers and sellers will become historical buyers and sellers in some point in the future. Okay? That is always, guys, important. Now you understand what I'm implying. Historical price action, which was happening 5 or 6 ago, is not that valid, because Swiss National Bank movement, euro dropping below 1.2000 is making a now moment buyers and sellers versus some history in the past, but this now moment buyers and sellers will become historical buyers and sellers in the near future. Okay, that is one of the reasons why traders who have been profitable, let's say a year or 2 years, 3 years ago, are not profitable in the now moment. Okay? That is, now I'm not saying that again that those traders are not good traders. They're definitely good, they know what it should be done, but no matter whether if you think that your system is good or your system is bad, you want to change the system, you need to adapt to current market conditions. You need to watch the price. You need to watch now moment buyers and sellers, because those now moment buyers and sellers will become historical buyers and sellers. And you need to definitely, by using that knowledge, you need to definitely know how to exploit the momentum. How to exploit the momentum, especially if you are intraday traders. If you want to trade during the day, if you want to trade during the single day or week, you should always try to exploit the momentum. Because momentum will become very obvious when the price reaches supply demand zone or supply zone. We will definitely be seeing rejections, and now moment buyers and sellers. Okay, please guys, save your questions for later. We need to focus on the subject here, and after we finish with webinar and presentation, of course, then you will be free to ask me whatever you want. So please save your questions for later if those questions have not to do anything with this webinar. Okay, now this is the slide, and I have purposely opened Australian dollar weekly chart. Okay, so you can see on this chart that I have manually drawn a line. This is hand drawn line, and at this point this line respects the support. So we can say that at this part to the left, this has been basically a support level, a simple support level. After that level was broken and again retested, broken to the downside, retested, broken down, this level now is definitely a resistance. So this is a scholastic example how support became a resistance. At this point and at this point, this was the support. At this point it was tested as a resistance, but it's again support because the price broken through it and came to retest it. But at this point on, we definitely know that this level now has become a resistance. And now when we know that one single level has become a resistance, we know to define a supply zone. Okay? Drawing manual levels, we can identify this zone here to be supply zone. And you can see how the price reacts. You see head and shoulders into the supply and then selling off hugely. Now guys, pay attention. This is weekly chart. Number of pips on weekly chart is huge. One single candle can have more than 300, 500 pips in it. Okay? So always pay attention when support becomes resistance and vice versa, and how those levels can react when becoming full-blown supply and demand zones. Okay? And this is head and shoulders, which has been taken out in supply zone, and you can see selling on weekly chart. Okay? Now let's see the same example. This is the same example, and you can see it now. This zone, now we are not referring to specific levels. We are referring to specific zones. Okay? We are talking about zones. That is why we are saying demand zone, supply zone. This zone here is defined as demand zone. This wick here has defined this simple zone as demand. So once this wick has been taken out, you can see this, we expect the price to be bought into this demand zone at least for the first time. And you can see that there are evidences, obviously the price has been bought into demand zone. Okay? Also here, also here, also here. Now, if you zoom in to lower time frame, let's say 1 hour time frame for intraday trading, you can see that this demand zone has been traded perfectly. Now, if you zoom into this candle, you could find a lot of opportunities to buying. Here also, until this candle here. This candle has broken the demand zone. Okay. Now we think that this demand zone can become a supply. Okay. So this demand zone has been broken here. It created a new demand zone at this point. Okay. We see the reaction. But we see that this zone is becoming a supply zone. So from this point on, we can expect selling next time the price hits the zone. We see that new demand zone has been rejecting the price towards previous demand zone, now supply zone, and you can see the reaction. Definitely the price was sold into. Okay? You can definitely see the reaction. Now, this demand zone after this point has become a little bit wider, and you can see that this is weekly chart, I mind you. If you zoom into 1 hour chart, you can see strong buying of this demand zone. Usually, that is why I'm always giving you guys, if you noticed, on our weekly recaps, which have been very, very successful, having over 120, 150 pips in average, I always say trade the first touch of the zone. Okay? And that is very, very connected. It's really connected to supply and demand theory. Usually the first test or a retest of supply and demand zone is most fruitful. You can see in this example here that this demand zone has basically widened up at this point. Okay? And next touch, this was the first touch here of this demand zone, it was basically a huge winner. Now, this is weekly chart. If you zoom into 1 hour chart, you can see that more than 150 to 200 pips could have been made on trading demand zone inside the zone, inside the demand zone. But these wicks here, which have appeared, signify that this demand zone can soon become again a supply zone. Because now we see the demand zone, this lower line of demand zone, has been bought into, but the upper part of demand zone has been sold. That means that after it breaks out, next touch of this zone will become definitely, at least the first touch, will become a sell. Okay? So that is why we need to mention distal line and proximal line. Distant line is the line which is the highest part of the rectangle. So this is distal line. Proximal line is the lowest part of the rectangle. Okay? So this is the distal line. This is the proximal line. Once the price creates a demand, let's say in this example, in the zone, we try to trade in between distal and proximal line, but also hoping that the price will be rejected out of the zone to next higher supply zone. Okay? But if you notice, especially if you draw the zones on higher time frames, you can see how the price can be traded in between distal line and proximal line. So if you zoom in here, if you zoom, let's say, in on 1 hour time frame, you can see that this demand zone basically can become your trading zone. buying into demand and exiting basically at the higher part of this demand zone, because if there is no significant breakout to next supply zone, this demand zone can become a supply zone. Okay? The smaller and short-lived zone, the less significant or strong it becomes. That is, it's very important for us to use multiple time frame analysis. If you scalp, then obviously 1 hour zones, supply and demand zones, can have significant impact on 5-minute trading. If you trade 1 hour time frame, 4 hour daily, weekly supply demand zones can be very significant. Okay? So look for the zones that held the price for a significant period in time. For that, you need to use higher time frames. Weekly chart is suitable for finding historically strong zones. Also, you can use daily, 4 hour if you trade intraday. If you trade intra-week, then usually you will use 4 hour entries, daily entries. Then you definitely need to use weekly and monthly demands and supply zones. So use multiple time frame analysis when you're trading in the zone. It's always best to look for daily, weekly, monthly zones. If you trade 4 hour time frame or more, even if you trade 1 hour, those weekly zones can be significant. But if you trade 1 hour and you want to make intraday positioning trade, then also trading on 4 hour, looking for 4 hour zones, daily and weekly, is also very, very significant. Remember, price will always react with the history. And if you follow my analysis, you can find it that I say very often I say historical level of I don't use term supply and demand, but I use historical buyers and sellers, historical breakouts. So I always look for historical price reaction before I make my analysis. And that is one of the reasons why the analysis is pretty much successful. Okay? So you need to know to define historical levels, how the price reacted in history, and to compare now moment versus historical moment. Okay? It's very important. Okay? It can give you the edge in trading. Wicks are very important. Okay? So wicks are very, very important. When you see wicks, guys, that will give you, that for me, as I always say, seeing the wick is very often more important than seeing the body, because the wick is, that is what price action telling you. Wicks signify buyers and sellers. Okay? And if you want to define correct supply and demand zones, you always, without any exception, should use wicks to define the zones. This wick here has more impact than this body here. This wick here is more important than this body. Okay, these wicks here, these reactions are more important. These wicks here are more important than these bodies. These are rejections inside the zone, telling you that this demand zone may soon become a supply zone. Once it's broken, next first touch will usually be a sell into. Okay? Price will always react with the history, and drawing new supply and demand zones after SMB has unpegged its currency from euro, after euro is broken 1.2000 floor, now it creates some new levels which will become historically important levels in the future. Okay? Because now moment always reacts to historical buyers and sellers. That is price action trading. That is the core of price action. Now, trading a simple system is not enough for you to survive in the Forex market. You need to know where those buyers are, where those sellers are, where is the history of buyers and sellers versus now moment buyers and sellers. Okay? Supply and demand are almost exclusively, those zones are exclusively used in MTF trading and intraday. Without knowing supply and demand, we are almost impossible to use multiple time frame trading or analysis. Intraday traders want to recognize previous buyers or sellers in history. Because if I trade intraday and if I see that the price has entered a weekly demand and my system is telling me, okay, this here, this zone here, and this, especially this level here, can be a good bullish entry, I will definitely use this entry here on 1 hour time frame and try to trade towards this distal line, the highest part of this rectangle, because that is the highest part of demand zone. Okay? Now moment will react to historical moment. Even scalp traders can benefit from supply-demand trading. Open your 1 hour chart, define supply and demand on 1 hour chart, drop down to 5-minute chart and watch how the price will behave on 1 hour supply and demand. Now, obviously, we need to define different types of levels and price movement within supply and demand. Now remember this, and I will refer to this later during this webinar. We have 4 different types of levels. DBD or drop base drop. This is drop base drop. Then DBR, drop base rally. Okay? Drop base rally. It's called DBR. RBR, rally base rally, and RBD, rally base drop. Okay? I will also use the examples later to define, but these are most basic and most important movements within supply and demand. Okay? Drop base drop and rally base drop are usually found in the trends. You can see this is the trend. When you see the price falling down, then pulling back, then having a congestion and another leg down, that is a trend. But drop base rally and rally base drop is definitely V-shaped reversal, rooftop, that can easily become a new trend. Okay? So different types of levels. Remember this, we will be visiting this often in this webinar. Now, let's see 1 hour chart example of Australian dollar. Okay? So first we have identified this to be a supply zone. And you can see that from this demand, okay, the price came to supply zone, was rejected, this again rejection, but in between this demand and supply zone, there was also a mini demand which was created here by this candle wick. And when the price has reached the level, drop down to create mini demand zone, you can see that at the next attempt here, the price fully respected this newly created demand zone to basically retest the supply zone, and you can see the reaction. Immediate selling. So demand traded to supply, then the price was trapped inside the zone, then it created a mini demand here, and that mini demand responded by buying here to this historical now supply and dropping the price down again to this historical. This is now moment, this is historical, because we are looking in the past, right, on 1 hour time frame. And look at this, once the price dropped here, look how it reacted. It was perfectly bought from this place here, from this zone into this mini demand, which has become a supply now and was again sold until this demand zone became a supply zone. Now you see the logic. It's the price is basically telling you everything. Okay, the price is telling you everything. Dorin is asking how strong the news influence the zones. It will always influence the zone. But if the zone is broken with a false breakout, then the price can retrace again within the zone. It can retrace again within the zone. Okay? So that is, for example, if you're watching Australian dollar, 1 hour, this could be the news here. This could be the news. Look at the reaction. But where was the reaction stopped? At this supply zone here. This could be also the news. Look at this candle. Where was the news reaction stopped? Into this demand zone. Look how price reacts. And definitely if the price comes here at the next time, it won't be sure. Definitely Australian dollar is heading really, it's a bit lower now, but this is now a supply zone. And this demand zone has become a supply zone once these wicks have proven to be indeed selling. And look at this, breakout, and it wasn't even retested. But during this time, on 1 hour time frame, it could be traded. Now you definitely need to understand supply and demand. That is why I will again show you by making markers on the chart how you can also define it by yourself. First, you need to see where price is quickly dropping or raising. In this example, this is dollar-yen 1 hour chart. We can see at the point 1 that price is quickly dropping to the downside. So point 1, price is quickly dropping. Point 2, price reaches the same zone, then rejects. Okay? So once the price has fallen at this zone here, we can define this zone as a supply zone. Price has reached, after broken, price has reached into supply and was sold after. Okay? It was rejected. 3 candles of rejection into the supply. Only a fool would buy here. I would either wait for the sell or I wouldn't trade it at all. These are strong rejections into the supply. Now, again, we have point 1, price quickly dropping. Point 2, price reaches the same zone that then rejects. Again, point 1, price quickly dropping. Look at the zone. It's defined here. It's defined. Look, wicks. Look at the zone. Then, bang. We have to the point 3. Price quickly raising. Look how the price reacted. Quickly raising. Now it found the base of the price movement where the price moves in sideways. Another zone has been created. Look, rejections into the zone. But where those rejections were headed? Towards point 3, where the price quickly raised before. So point 5, price reaches the same zone, then rejects. Towards the supply. Then drops down again. Price reaches the same zone, then rejects. Okay? So we have concluded that for pinpointing supply and demand zones, you should watch for price quickly raising or dropping, and finding the base of the price movement. Watch where the price quickly fell or quickly raised, quickly bounced, and watch where the price was having a sideways movement. It's called the base. What did we talk 10 minutes ago? DBD, DBR, RBR, RBD. Okay, we'll refer to the slide again. Quickly drop, then make a base, quick rally. Quick rally, make a base, then drop. Quick drop, make a base, drop. Quick rally, make a base, rally. It's same here. It's same here. Quick drop, quick rejection. Drop, rejection. Drop, base, 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 rejection, drop, rejection, drop, rejection. Okay? So price creates supply and demand technical zones by quickly dropping, quickly bouncing, and forming a sideways movement. Because that sideways movement is becoming either a supply or demand zone. Watch those concepts which I'm showing now and observe how the price reacts to history and now moment. Observe how price reacts in history. If the price was bought into this zone here at this point we identify this to be a demand zone and we identify this to be a supply. The chances are once the price reaches supply it will be sold, and next time at the first touch, which is this, it will create another new moment buyers, new moment sellers, new moment buyers, because those levels are historically proven themselves. Now DBD, DBR, RBR, RBD. Drop, base, drop. Look at euro dollar 4-hour chart. Drop from this point, huge drop. Base, drop. Then from this demand here, we see a bounce. Base, bounce, or RBR, rally, base, rally. Then the price fallen down again to create rally, base, drop. Rally, base, drop. Then again, rally, base, drop. But where is the price magnetically pulled into? These levels of supply and demand. These are the levels of supply and demand. This is the zone of supply and demand. Okay? What did we say again referring to these lines? Distal line, proximal line. Remember this. Distal line, proximal line. Distal line, proximal line. Distal line, proximal line. Distal line, proximal line. Remember this. This is the zone. Rejections, base, drop into the zone. Rejection, base, drop into the zone. Define this by yourselves. Now this indicator which I have sent to you is an indicator which basically plots the supply and demand zones on your screen. If you follow the concept of these zones, you can upgrade your system or your method to give you more precise entries, more precise stop, and more precise target price. Okay? Dorin is asking, how do we know if the price will reverse in the zone or will pass the zone? There is nothing 100% in Forex trading. Who can guarantee you when you exit from the building that there will be no brick to fall onto your head? You don't have any guarantee. you can only speculate. Forex is stacking odds to your favor. If you know the concepts of price action, if you know the concepts of direction, momentum, divergence, supply and demand, that knowledge can be combined to give you more accurate analysis of supply and demand. For example, if you use a system which is telling you to sell at this point on, you can plot these levels to see if this is supply zone, and you can try to sell it. I'm giving you an idea. But definitely supply and demand zones are zones where the price will react somehow. Now obviously, if you have taken the entry from this point and the price has come to this point and came back, obviously your trade would be at least on break even. But this is helping you to better define where you should be entering the position and where you should be exiting the position. For let's say stop losses, examples, if I would make a trade here, I would definitely place my stop loss below the zone. If I sell, I would place my stop loss above the zone. Okay? Now this indicator, when you click on the indicator and click on edit, it will show you this screen here. Force time frame is giving you the supply and demand on defined time frame. So let's say that you are using 4-hour time frame and you are putting here 0. That means that the time frame for showing supply and demand will be 4 hour. But let's say if you trade on 5-minute chart and you put 60 here, it will show you supply and demand zones of 1 hour chart on your 5-minute chart. Okay? If you put Fibonacci's, then it will also show you Fibonacci for the zones. Okay? So the indicator looks like this. This is force time frame. It says 4 hour. So we can use multiple time frames. For let's say if you use 4 hour, you can put daily supply and demand zones. Okay? So this is force time frame, which we put here. 60 is for 1 hour, 240 is for 4 hour, and 1440 is for daily. Okay? If you trade 5-minute, you can use 60 here to give you supply and demand on 1 hour chart. If you use 1 hour chart, you can use 4 hour daily or weekly to give you the exact levels. This is supply zone proximal level. This is demand zone distal level. Okay? And you can see that 4 hour now is heading downwards from supply to demand. Okay? Okay guys, this is about the indicator. This is about supply and demand. Of course, supply and demand trading is the exact science. This was a short introduction into supply and demand. I try to be as concise as I can because there are books written about supply and demand, and I try to present you the most important points for supply and demand in this 1 hour webinar, of course. And if you don't know how to download the indicators, I will pause the screen now, and I will definitely be now I will give you the link. I just need to find the link, and I will give you the link so you can safely download the indicator if you haven't done this already. Okay, so this is the link. I will give you the link now. Okay, so let's let's just copy paste it. Okay, so the link is here. Do you see the link? Okay, if you don't see the link, I will give you the link address again. Okay, great. So you can download this indicator from the link. Okay. Yeah, an indicator works on new builds on MT4. Okay. But I have also received, one of my fellow traders told me that if there is a problem with indicator working on MT4, some builds of MT4, he gave me the same indicator which he basically modified to work on MT4. This indicator works because I have done this webinar today, and you can see the indicator shows you current supply and demand zones. Okay, and I have been using the latest build of MT4, and this is not modified. This is an original indicator. Okay, so this is the original indicator which is working, guys. You can see the chart. It's 4 hour. It's current chart of euro dollar, and this indicator is plotted at the current chart, so it works. And I always have MT4 uploaded to the most recent build. Okay, so it works. But if the indicator is not working for some of you, I can give you the modified version. You can tell me, you can send me an email. You know my email, tarantulafix@gmail.com, and I can send you modified version if it doesn't work for you. So guys, please, now if you want to expand this concept again, watch my webinars or with Admiral Markets, guys. I will show you again another screen where you can sign up for these webinars, and we always, as you can see here, have weekly Forex recaps, supply and demand zones, which I am presenting you also of on Forex weekly recaps, are basically modified supply and demand zones which I have created with my Camarilla MACD, and we have usually in between 100 and 150 pips on average, sometimes even more than 300 pips on average. Okay, if you have AX4 and MQ4, guys, if you have X4 and MQ4, put both of it into your indicators folder. Okay, so sign up for these webinars. We have another one coming in very soon on Monday. We had great week behind us, more than 200 pips. You will see the results, and of course sign up. If you have problems with, as I say, indicator working on your builds, send me a request. It's tarantulafx@gmail.com. I sent you my email address, so you can definitely ask for that modified version. Okay, and yeah, well, you're very welcome. I'm always here to help you. So it's still weekend. You can use this knowledge to help you in trading, and never ever forget that if you use supply and demand in your trading, you will have more chance to win in the Forex market. You're stacking the odds to your favor. Okay, so sign up for the webinars, sign up for incoming good webinars, and grab this free knowledge as fast as you can, because market is always changing, and if we want to follow the market, we want to make those changes. And of course, thanks to Admiral Markets, we are constantly adapting to the market and constantly following the market behavior. Okay, for all of you, again, use supply and demand, use these zones to help you in your trading. Follow me on Twitter to grab the latest updates and sign in for new webinars. Thank you guys for listening to me. I wish you very pleasant evening and weekend. I think the video will be uploaded in Vimeo very soon, maybe even tomorrow. And of course, visit this webinar as much as you can to grab the knowledge, as I say, as fast as you can, because now we have some market change conditions where we should adapt. And I'm here to help you to adapt to new market conditions. Thank you and trade safe.